Ladies and gentlemen, good day and welcome to Krishca Staffing Solutions Limited Q3 FY24 earnings conference call hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Chandni Chande from Kirin Advisors. Thank you and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Krishca Staffing Solutions Limited. From management side, we have Mr. Lenin Krishnamurthy Balamanikandan, who is Chairman and Managing Director, Mr. Terli Venkata Shivaji, Whole-Time Director. Now I hand over the call to Mr. Balamanikandan. Over to you, sir.
Yeah, thank you. Ladies and gentlemen, a very good afternoon and a warm welcome to our Q3 FY24 conf call. I am delighted to connect with all of you as we delve into the financial performance of Krishca Staffing Solutions Limited for the third quarter of this financial year 2024. Prior to exploring the specifics of Q3 FY24, let me underscore some significant developments that highlight the resilience and the growth trajectory of Krishca Staffing Solutions. Firstly, it is with great satisfaction that we report the achievement of surpassing the FY24 revenue within the initial 9 months of FY24, demonstrating a robust growth trajectory with a substantial total income of 76 crores and 58 lakhs in the first 9 months of FY24. This noteworthy accomplishment is a testament to the dedication of our exceptional team, and we eagerly anticipate exceeding these milestones in the upcoming quarters. Out of this 76 crore and 58 lakh revenue we achieved, almost 15% of revenue came from exports. And operationally, we are pleased to announce that our new production line installation is going on and it will be fully operational by February 2024 this month. Simultaneously, we have achieved a substantial progress in strengthening our client relationship, leading to a notable uptick in sales and acquisition of new clients. And internally, we are also developing a in-house ERP for steel strapping manufacturing and QMS management. The trials are going on. It will be used by the team from April next financial year. So this internal ERP development will definitely help our team to improve efficiency. It will help us when we scale up the operations. And also, I'm pleased to introduce Mr. Jagajoti Naskar, who has been appointed as an additional director, non-executive and non-independent, effective from March 1st, 2024. Currently, he is serving in the director role at the Krishca Total Packaging Solutions in Dubai. Mr. Naskar's strategic appointment aims to enhance our operational efficiency and our growth plans in the primary packaging, especially in the HTP, VCI, tarpaulin, and dunnage bag. So he has a very rich experience in the senior level roles in various primary packaging companies. So we strongly believe his inclusion will help us diversify into various other segments in the primary packaging apart from steel strapping. Additionally, in the factory, we are optimizing the operational efficiency by relocating the strapping steel manufacturing operations from our existing facility to a adjacent facility. And on the expansion front, we are excited to announce the inauguration of new branch offices in Jharkhand and Chhattisgarh. These strategic additions serve as pivotal distribution channels aligned seamlessly with our commitment to bolster market presence and streamline operations for enhanced efficiency. And on the packaging contract front, we have successfully started our new packing contract in the sale SRU in Ranchi from December 1st. And also, our team is in discussion in various packaging contracts with various clients in Odisha and Jharkhand region. Almost more than 300 crore worth of packing contracts orders are in the pipeline. And in the public sector unit front, we are in discussion with the various PSUs to get some trial orders. And we are very positive to enter into PSU as a steel strapping supplier within this quarter end. And also, we are also tied up with the various automation solution providers to provide automation services, the packaging lines to our clients. And I appreciate your attention and look forward to engaging discussion on our Q3 FY24 performance. Thank you. And let me take you through the financial performance of our company during Q3 FY24. Our total revenue was at 27 crore 69 lakh. Our EBITDA came at 5 crore 70 lakh. And the EBITDA margin was at 20%. Profit after tax was at 3 crore 44 lakh. And our tax margin was 12.43%. So this resilient performance stands as a testament to our efforts, effective growth strategies, operational efficiency, and the lucrative market opportunity we seized during this period. We remain very optimistic about the future growth prospects, and with expanded production capabilities, new product diversification, and regional expansion, and additional of various new products, and a lot of packing contracts also we are participating. So we are very confident to continue on this path of growth. I would like to reassure you that the future holds promising opportunities for our company, and we are committed to maximizing profits from all the opportunities. So I express gratitude for your trust in the company and for being an integral part of our journey. So with this brief update, now I'd like to take any questions you may have. I request the operator to kindly open the floor for QA. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Nihar Shah from Crown Capital. Please go ahead.
Yeah. Hello. Good afternoon, sir. I have 2 to 3 questions. First question is regarding our utilization level. So can you tell me what is our capacity utilization level?
We are right now utilizing about 70 to 75% at our existing plant.
Okay. So then what will be our CapEx plan going ahead?
Our new line, with the equal capacity of the existing line, is installation is going on. Almost 75% of the installation is complete. So we are very positive that we will start the commercial production by the end of this month.
Okay. And what kind of revenue growth we are seeing going ahead, like for Q4 and 2 years down the line?
For Q4, the revenue growth is very, very similar to the Q3 performance. We are trying to deliver more than Q3, obviously. There is a lot of positive orders we are getting in the export front, especially in Q4. And moving forward in the next 2 years, since our new line is also coming into picture by this month end, and with the new line, we can produce one more grade of trapping that is very ultra high tensile strength. So that is open up a new market for us, the direct sales. So in the packing contract front, we already started doing 3 contracts. So we just started the packing contract division in the July we got the first order, December we got the second order, and this February we are starting one more packing contract maybe this week. So and also we are in discussion or in tender with various clients at various stages. So almost 300 to 320 crore worth of packing contracts are in the pipeline. So we are very positive that next 2 years we can definitely maintain this similar growth trajectory.
So around 35 to 40% growth can be expected, right?
Personally, I don't want to comment, give you a figure, but yeah. Once we come up with a March figure or results, we will come up with some guidance for the next financial year. But I don't want to make a comment, but definitely we will very positive regarding our performance, team performance, and the opportunities we are having, seeing in the market. So definitely we can maintain this kind of growth.
Oh. And one last question on the EBITDA margin. These are sustainable EBITDA margins, or are we expecting it to grow further from here at 20%, which we achieved this time?
It would be the similar range. I would say if you look at our last financials, 23 and the first 3 quarters results, we are mostly trying to maintain around 20% minimum. So we will try to maintain that, but in case if there's a big opportunity, like a very big order and a little less margin, and we don't mind taking it, because all the orders we are taking are long-term orders, and there is always opportunity to optimize the margin once we get into an order. So we are open to be aggressive and take some more orders with a little less margins also.
Okay, sir. All the best.
Yeah. Thank you.
Thank you. Our next question is from the line of Harsh from Chris PMS. Please go ahead.
Thank you for the opportunity. Congrats on a good set of numbers. Wanted to just understand that is there any progress on the PSUs we were trying to break through? In the previous con call we had discussed we would probably expect some breakthrough this year. So any movement on the PSU front?
Yeah. Hi, Harsh, sorry. Yeah, there has been some very positive progress, and we are expecting to get some orders within this quarter. It's supposed to resume December itself, but there has been some delay. We are very positive to close some orders from PSUs in this quarter.
Got it. Perfect. And second was around, we have incorporated our overseas subsidiary. So just want to understand what is the business ongoing there, and is it as per the desired goals which we had set for incorporation of the subsidiary?
Yeah, definitely. Subsidiaries in UAE is performing very well. I can give you one example. If you look at our last financial year, almost 6 to 8% of our revenue came from exports. But till December, for the first 3 quarters, almost 15% of our revenue coming from exports. So our revenue is almost doubled in the export front. So our team in UAE is performing really well, considering we just incorporated in July, I guess.
Got it. Makes sense. Perfect. Thank you so much. Best of luck.
Yeah. Thank you, Harsh.
Thank you. Our next question is from the line of Vivek from Shanti. Please go ahead.
Yes, thank you. Hi, Mr. Lennon. Vivek here.
I'm Vivek.
Yeah, hi. You're staying the course. You're doing very impressive things, and I heard about your office opening in Jordan. Am I right? Jordan and Chhattisgarh.
Yes, Chhattisgarh and Jharkhand.
Which one? Jharkhand.
Jharkhand, yeah.
And in the last call, I think you did mention that you are opening a Middle East presence also. So my question is, while you're showing an impressive, I'm assuming you're showing something like 25 to 30% year-on-year quarterly growth. But can you just roughly give a guidance for this year? What growth would you show? And more importantly, on the EPS, because the last call that you had a very impressive EPS growth. So can we look forward to something similar, or what would your guidance be on that?
Regarding the growth for this year, when we announced the March 20 FY23 results, we given, I think, 35 to 45% guidance. And I would like to stick on to that forecast for this year. I think we would definitely achieve that, whatever we given guidance.
Okay.
In June. Yeah.
Okay. So you are saying from the 10.67 EPS for the last year, you would show something like a 35 to 40% growth on EPS, which is the guidance that you gave beginning of the year.
See, I think EPS, in March, we did not go to IPO. So the number of shares was less. I think now the number of shares are increased. So even though we are delivering almost 45% in the higher revenue, the EPS calculation, I'm not very sure that I have to check.
Okay. So that would be one indication. And you did mention that for the CAPEX that you are doing, the proceeds of the IPO would be deployed in CAPEX. And have your lines been fully, installed and over how many years now? 2 years, 3 years? What kind of percentage improvement in the top line you expect on account of the CAPEX?
The line, 70% installation is completed. See, actually speaking, the line is supposed to be ready in January. There have been some delay at various fronts in the commissioning of this line. So almost we are running 6 weeks delay than the original deadline. So anyway, it should be ready by this month end, post case. And regarding the revenue from the new line, within the first year, we are expecting it to be utilized at least 40% in the next financial year. And our plan is to try to maximize the capacity as early as possible.
Okay. And at the current run rate, I think you would exceed 100 crores in top line this year. I'm assuming from the quarterly performance of around 23-24 crores that you have posted, if I remember right. Then you would be exceeding 100 crores this year, right, March end?
Yeah, I think we should do that. It's very much possible, easily possible. Yeah.
Okay. Many congratulations for your performance and all the best.
Thank you, Mr. Vivek.
Yeah.
Thank you. Our next question is from the line of Yashwanti from Cogin Finvest. Please go ahead.
Hello. Thanks for the opportunity and many congratulations for the good set of numbers.
Yeah, thank you, Yashwanti.
Hello?
Yeah, I can hear you.
Yeah. So I just wanted to understand, you said that you are working with a very good order book. So just wanted to understand.
Yeah, can you speak a bit louder?
Packaging business as well as from the packaging business.
Yashwanti, could you please repeat your question? I didn't hear it clearly.
Okay. So I just wanted to know what is your current order book, and if you can bifurcate between what is from the strapping business and what is from the packaging business.
Okay. So this is a big tricky thing that we got 2 packing contract orders, one in July and one in December. So these 2 orders valued about 5 CR per annum. And we just started one more contract that we still will not disclose because we are yet to get a clear purchase order from our client. This is a very, very big client. For them, it's a pilot order. So we are unable to judge the exact value, but we are expecting it to be at least 3 to 4 crores. So if you consider that, we have roughly 10 CR order book for the next financial year from packing contracts. That's on date. So considering to last financial year, there was like zero revenue from packing contracts.
Right.
This year, since we just started doing the contracts, so almost we have done almost 1.5 to 2 CR billing for the existing contracts in this first 9 months. But for the next year, definitely with the existing orders in hand, we can expect 10 CR revenue on a very conservative side. But anyway, we are almost in various stages in almost 6 to 7 contracts we are participating. All are big contracts than what we have in hand. But I don't want to give you any revenue guidance because all these orders are still in the various stages.
I'm just talking about the current order book, sir.
Current order book, yeah. We can say 10 CR order book for the next financial year from packing contracts.
Okay. And from the scrapping business?
Sorry?
From your traditional business of scrapping, what kind of order book do you have currently?
So, see, the almost like 70% of our orders are recurring orders. We don't have a long-term PO. That month on month, we get the PO from our clients. And we do have some, I can say roughly 15 crore worth of long-term orders in scrapping sales.
Okay.
Per annum.
Yeah, thank you so much. So my next question is regarding to the new production line, which is expected to be operational by March, you said, right?
Yeah, correct.
Yeah.
Correct.
So at a full capacity utilization, what kind of a revenue we can see from that production line?
See, the capacity is about 1,500 tons. Okay. So with the full capacity, we can expect up to 150 crores of revenue from the newly installed production line.
Okay. And we can expect that full optimization by FY26, FY27, if I understand it correctly.
We are see, our plan is to utilize the capacity as early as possible. But I don't want to comment on how fast we can do that.
Okay. So, recently you had expanded your presence to your branch office in Jharkhand and Chhattisgarh. So, can you give more, throw some more light? What are your strategies of having a business over there? What are the reasons for that? What is the staff? Or how much of staff you are employed there? So, basically, what strategies you have and how it is going to contribute to your overall revenue or maybe on your profitability? This is basically, I believe, is a marketing effort, right, sir?
See, we already have one branch office we opened in July or August in Odisha, where we got our first packing contract in Sham Metallics. So there we have a small team of like 5 to 6 people. They are managing their existing contract. If you look at the steel production, Odisha is the major state where all the major steel mills, primary and secondary mills are there.
Right.
And now we are opening up an office in Chhattisgarh in Raipur. Raipur is a secondary steel market for India. So there are so many wire rod and TMT manufacturers out there. And we are actively in discussion with 2 major clients in Raipur for a packing contract. So once we get these are like very big packing contracts in terms of value. So to manage the packing contract, we need a team over there and also try to convert more customers. Because packing contract requires a warehouse where we can keep our materials, stock, tools. So that the purpose of opening a branch office is to directly supply scrapping as well as manage the packing contracts.
Okay. So, just to understand it, so will you also need a warehouse or this branch office still facilitate direct sourcing from the supplying company to the customers? Just to understand it.
We usually set up a small warehouse because a lot of tools, spares, and all we have to keep that, in terms of need basis only we will give it to the customer. We keep a lot of stock of critical spares and tools. And to manage, because packing contracts are running 3 shifts, right? If sometimes we go for auditing, we need a place to stay. So it's better to have one small office somewhere or close to the place we do packing contract. That is the usual market practice.
Okay. So the office in the Raipur is basically a warehouse plus branch office, right?
Yeah, correct.
Okay. And that is on a rental base or you have...
It will be on a rental base.
Okay. Okay. And then, sir, for the Dubai subsidiary, are we supplying it to the overseas contract or it is in sales support for the Indian operation?
Sorry, can you repeat your question again?
For your Dubai operations, are we supplying it from the Dubai setup or it is just some sales support for the Indian operation?
It's kind of both. Mostly we are supplying directly from India, but now we started supplying directly from Dubai office also. Our plan is to slowly migrate our sales via our Dubai subsidiary.
Okay, so basically it is in sales support.
Yeah, it is currently mostly a sales support.
Okay, sir. Thank you so much for your kind replies. I'll join by immediately. And all the best.
Thank you, Yashwanti.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and one to ask question. Our next question is from the line of Darshit Shah from Nivana Capital. Please go ahead.
Hello. Hi, and congratulations on a good set of numbers.
Yeah, thank you, Mr. Shah.
Yeah. So, no, earlier, in previous call, we had talked about, you want to set up a facility in Dubai. I think around 20 odd crores was the requirement for that. So any update on the plan? How's it going, and do we kind of intend to put a capacity there?
I do have an update on that. We have identified a location, a place to put up a plant in Middle East. That might not be Dubai, maybe some other country. And it will be a joint venture. We are in discussion with potential partners. So we are in the process of signing the initial MOU. So hopefully this month we will come up with some announcement regarding our joint venture and also where we putting the plant.
Got it. And sir, how big would be this opportunity, since I understand majority of the Middle Eastern market is being catered by Chinese players. So
Yeah.
Can you help us understand how big is the opportunity for a player like us, and which markets are the most important ones?
See, the Middle East setup only, even now also we are not only supplying strapping. Apart from strapping, we do a lot of service on the also consulting, automation, everything we are providing. So if you look at Middle East, there is no such solution provider, packing solution provider in entire Middle East. So by having a strapping plant and a local supplier, and also who can advise them on various packing methodologies, I'm sure there is a good chance, even though the Chinese pricing might be lower, but having those local presence, because now everybody is waiting almost 2 months after paying the advance to Chinese to get the material. A lot of working capital also they are blocking, and having a local manufacturer will definitely support the steel manufacturers in Middle East.
Got it. And sir, what would be the market size that you understand India is roughly what you had highlighted earlier was around 3,000 to 4,000 crores, including packing and strapping. So what would be the Middle East kind of rough ballpark market size there, which probably we can cater to?
It would be a lot less, but I'm expecting at least in INR, at least 300 to 400 CR currently.
Okay. Got it. And sir, would we be kind of requiring funds for doing this JV, or it would be, how do you plan to fund this?
We are putting a budget for it. Regarding funding, either we also have multiple options yet to finalize. We can either fund it from internal accruals, We're also thinking about further potential issue still in discussion. Maybe we'll come up with our announcement in this month.
Sure. And so lastly, as I mean, most of the bigger companies like Signode and all have a majority of the revenue coming from packing contracts.
Yeah.
So where do we see us over the next, maybe 2, 3, 4 years? Do we also see the revenue shift changing towards kind of packing contracts? And I understand that gives little more longevity also to our revenues. And how's the margin there compared to strapping, if you can help us know?
If you look at Krishca at Signode, apart from strapping, they have like multiple products. And they also do packing contract where a lot of products are like pet strapping, plastic, everything is being used. So Signode is dealing various products, not only strapping. So there, if you look at the revenue, it is coming from various sectors. Maybe strapping and packing contract is still the biggest, but they diversified into various. They also do automation. So there are opportunities in various sectors. Packing contract. I have multiple times I mentioned this in the previous phone calls. Let's say last year, out of 73 crores of our revenue, packing contract revenue was 0. And this year it will be like at least 3-4 crores from packing contract. Next year, as I said, already we have 10 crore worth of packing contract. So slowly our packing contract share of business is increasing. It will continue to increase. Definitely, we wanted to push it up to 50% in the future in the domestic market, apart from the exports.
All right. And so how will be the margins over there?
Similar margins. So a mix of both. Some orders you get a very good margin. Some packing contracts are very tricky. Sometimes we are dealing with a lot of uncertainty. Some areas margins might go a little less also. It's difficult to predict when we get the order. We do the order, do the contract. There is always opportunity to optimize the margins. But the whole idea about packing contracts is to have a long-term, like 3-4 years kind of order book, stable order book with a similar margin.
Correct. And so lastly, on this domestic market, so we understand Signode is one of the major players, and there are little smaller players over there. So in terms of gaining market share and from existing players, what's your sense on this? I mean, how can we kind of reach up to those levels where almost majority of the market share is held by a couple of companies?
The thing is, market is also like evolving, increasing at a very high rate. So definitely there is a 10-15% market size expansion year on year. So a lot of existing steel mills are moving towards packing contracts. There's a new packing contract opportunities, and after like big steel mills, very big companies, they always wanted to have one guy. Like they cannot always go to Signode. Right? Even Signode cannot do all the contracts in the world. So there is always opportunity for one more guy to pitch in and support the customers. And again, with our aggressive process and setup, we are also very positive to capture orders from our competitor.
Great. Thank you, Mr. Bala, and all the best.
Thank you. Thank you.
Thank you. Our next question is from the line of CA Varun Agrawal, an individual investor. Please go ahead.
Thank you for the opportunity. Congratulations for the good set of numbers. I heard two numbers discussed on the call. One is about the 10 crore expectation from packing contracts next year, and another order book of about 300 crores. I am able to get clarity in both of these. Can you please explain?
Now we already have 3 packing contracts in our hand. So that orders put together would amount to 10 CR. So this 10 CR our revenue definitely will happen in the next financial year because already we have the order for the entire whole year. And what I mentioned in the previous answer, we are participating in various packing contracts. We are at various stages in various tenders. The total orders in the pipeline amount to 300 to 330 CR.
And these 300 crores of contracts, we are talking about packing contracts only, right?
Yeah, packing contracts, only packing contracts.
Because our strapping business is anyway a recurring business where there is no concept or order book.
Yeah.
Okay. And how do we defend and maintain the margins whenever there is a raw material price fluctuation?
See, it is a very standard practice in this industry. All the orders are coming with a price variation plan. So this price variation plan is linked with the HR price for in a quarterly or monthly basis. Because we are doing contracts that mostly to fill mills. So everybody know what is the price increase or decrease in a month in the HR price.
Right.
Yeah. So based on the price increase or decrease, there will be a calculation in the PO that will be added. Let's say the one rupees increase means that will be added to the next PO.
Right. And what is the present debt level?
Sorry, can you say again?
What is the present debt level or borrowings?
We're on the debt levels. Okay. So we do have a working capital limits with HDFC Bank, almost 13 to 14 CR.
Okay. Thank you so much. All the best.
Yeah. Thank you, Mr. Varun.
Thank you. Our next question is from the line of Tarun Modi, an individual investor. Please go ahead.
Hello.
Yeah.
Hello. Yeah. Hi. Good afternoon. First of all, I would like to congratulate Krishca team for such a nice result. So I was able to understand from many of the queries that you were able to answer. Now only one query left out is about Middle East operation, what we are starting. So how is our order book from Middle East side?
Mr. Tarun, in Middle East, most of the orders are, on monthly basis. So there is no concept of packing contract. All the clients are doing their own packing. So they only buy the consumables. So we don't have a long-term arrangement with anyone, any customer. But all the orders are like monthly or quarterly basis. We get 3 months PO continuously, where they will argue the schedules, stuff like that. But not like India. We don't have a long-term 1 year or 2 year orders with anyone.
So currently we have 3 months visibility there.
Sorry.
Or do we have now currently some orders like 3 months or some orders are there, or still we are looking?
Yeah. Next 3 months we have a pipeline.
Okay. So what is the size like? Value in, if we see our revenue, so how much will be the contribution there?
Till December, we have done 76 crores, right? Out of that, 16% of revenue came from exports. Roughly 11 crore 50 lakhs.
Correct.
Okay, but I think moving forward in this Q4, we are expecting more share, more than 15% we are expecting from exports.
Fine. So sorry, I missed one thing. When we started this Middle East, because I was based on the last phone call, what I've gone through, we'll be starting this quarter. So whatever 16% is there export revenue coming, so that will be this will be Middle East operation will be additional things, what we'll be getting it.
No, I'm including that Middle East sales and our exports. I'm telling this is the share.
Okay. Fine. So our margin would be similar, what domestic margins we have. Similar margins will be there in Middle East also in packaging.
In Middle East, right now it is little less, honestly speaking, because we are fighting it out with the Chinese mainly. So the margin, because there has been some increase in the shipping costs because of this Red Sea issue, so that is also lowering little margin. And also even a lot of even Koreans are also very aggressive with pricing because the raw material is cheaper in China and Korea compared to India. So margin is a little less overall in exports.
Okay. So when we are targeting our company like going to reaching is to 300 CR level.
Yeah.
This year we have touched 100. So when we are targeting any by when?
Well, we have a 5-year plan. We maintain the similar growth projections and whatever efforts we are putting in exports and packing contracts and also from the new line. So everything goes well. That is a easily achievable target.
Okay. Okay. Thank you. Thank you, sir. Thank you. All the best.
Thank you, Mr. Tarun.
Thank you. Ladies and gentlemen, please limit your question to 2 per participant. Should have a follow-up question, we request you to rejoin the queue. Our next question is from the line of Jishan Singh from Kirin Research and Analytics. Please go ahead.
Yeah. Thank you for the opportunity, sir. Hello. Hello.
Hi, Mr. Singh. Yes, I can hear you.
As you mentioned that you are in the order for the 300 crores in packaging business, right?
Yeah, can you say again? Don't mind.
No. As last year you mentioned that you have participated in the bid for 300 crore in packaging segment, right?
Yes, yeah. Various, almost 6 to 7 different contracts. Worth 300 CR, we are in discussion with various clients.
What will be the strike rate, that is winning rate for you in that?
Sorry, your voice is not clear, sir. Can you say again? Repeat the question.
Yeah. I was asking what can be the winning rate for you in that segment?
Asking the probability?
Hello.
Hello, sir. Your voice is not audible. Can you speak so loudly?
I was asking that what can be the winning rate for you in that segment?
Winning rate. Keep your phone far away from your.
Hello.
I think at least to be on a very conservative side, 20% of winning rate is possible. Post the case.
Okay. Got it, sir. Got it. And can you please give me the estimate for the Middle East market size that you are catering? Hello.
I'm very sorry.
Hello.
Yes.
Yeah, sir, I was asking that, can you please give me an estimate regarding Middle East market size that you are catering?
Yes. The thing, there's a record Sir, if you have any questions, you contact company secretary or you can email. I can have answer you separately.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Surichi Parmar from NX Wealth Management. Please go ahead.
Yeah. Hello, sir. Just
hi.
one question from my side. Last con call you have told about your setup in Singapore also, and you told that some big contract is coming. So for that you want to have a local presence in Singapore. Any update on that, sir?
Yeah. That tender not yet concluded by the Singapore government. There maybe it will happen in the Q1 of next financial year. So.
Okay, fine.
Yeah, we're actively following up. It will definitely, possibly will happen in the next financial year, maybe in Q1 or Q2, worst case.
Okay. So we are eyeing some other contracts also there in Singapore other than that?
Right now, that is the only contract we are focusing.
Okay, fine. And in Dubai also, earlier, like you were mostly trading activities there in Dubai. But can you tell me that there also packaging contract option is there in Dubai portion?
No, madam. In Dubai, in Middle East, there is no concept of packing contract in the steel mill. Okay. Because the manpower expenses are very high and handling of manpower, availability of manpower also, visa issues are there. So generally, all the manufacturers, they try to keep the manpower themselves.
Okay, fine. Like you have appointed additional director in Dubai. So,
Yeah.
are you looking for diversifying from the packaging of steel strapping contracts? You are eyeing for that in coming 2-3 years or so?
So, if you look at steel mill packaging, the strapping is a major component. Apart from that, a lot of plastics like HDP, VCI, desiccant, tarpaulin, everything is being used to pack any steel material. So, since we already have strapping, our next organic growth would be entering into primary packaging. So this addition of Naskar is part of that strategy. He has a rich experience in that domain. Already, we started dealing with those products from July onwards.
So these will come in packaging contracts, or these are just the trading goods?
Everywhere it comes in both. Trading also we are dealing with products. As well as the packing contracts also this is being used.
Okay. So this will be like in addition to steel strapping or something. In addition to that?
It's a complementary. It's a complementary product. Whoever is buying strapping, definitely they will be using this same product. So our same team can do consulting on these products also.
Okay. So our like margins will gonna have some impact due to this, like it will improve or it will remain the same?
The idea is generally primary packaging has little higher margin than strapping overall. So the idea is to to improve, it will definitely try to improve our overall margin if we increase the primary packaging sales revenue.
Mm-hmm. Okay. Thank you so much, sir, for answering all the questions, and congratulations.
Thank you very much.
Thank you. Our next question is from the line of Shubham, an individual investor. Please go ahead.
Hello.
Shubham, sir. Hello, Shubham.
Can you hear me?
Yes, sir. Yes, sir.
Yeah. So I just want to continue on that margin question. So firstly, on the steel prices, somebody asked that how do you hedge your raw material? So just wanted to get a sense, do you have all the contracts on a pass-through basis, or are those a fixed contract?
No, all the contracts are there are some contracts we have a fixed where the strapping component is very less. We have a fixed price, and around 70% of the contracts we have variable pricing.
So that's 70% pass-through, right?
Yeah.
So it's better to say that you may or may not get any trading gains on those contracts. I mean, you already hedged the raw materials, so you would have that sustained 20% margins for that matter, right?
Can you? So you were saying if there's a price increase, you were telling price falls, so we'll get a better margin.
No, but you have already hedged it. So, for example, if you get a contract, right? So at that matter only you would book your raw material.
Yeah. But in the long-term 1-year order, we cannot block raw material for the entire year.
Correct. In that sense, then how do you procure? Do you have any forward contracts for?
See, mainly steel is the more highly fluctuating component, and where we have a fixed price contract, those contracts are very small in value. Manpower cost also there, tools, service cost, everything is fixed. The variable component will be very less. Like overall value, 30% is the variable component. The remaining 70% would be like pallet cost. Everything would be fixed throughout the year. In those contracts, so we will always try to have a cushion in the margin in case of any here and there huge price differences happen in the market.
Okay. So at a point in time, how much days of inventory do you hold for your raw materials?
In our factory or in a packing contract, you are asking?
In fact, factory.
The factory, minimum 1 month inventory we are keeping.
Okay. Understood. And one question on, CapEx. So say, the plans that you have, if it gets operationalized, and the timelines you suggested, right? So say FY24 or FY25. So what would be the maximum revenue potential of those capacity, running at the ideal, say, utilization rate of 70 to 75%? So what could be the maximum revenue potential there?
The maximum revenue, we can definitely expect 150 crore revenue from the new line. At 75%, definitely 100 crore we can expect from the new line.
That's a new line you're saying. So for the entire set of projects, so for the entire business, that would reach like 200 crores by FY20?
No, for the entire business, full capacity put together only strapping sales would be 300 crore. Now we have 2 lines. Total capacity would be 3,000 tons per month. Even if we just consider the strapping sales, not any packing contracts, the potential top line can be up to 300 crore.
Up to? Sorry, I missed your number.
Up to 300 crore. Let's say if we are utilizing full capacity in both lines, so we can expect 300 crore revenue.
This is including your packing as well, right?
Not including, only the direct sales of strapping, not including packing contracts.
And the packing contract potential would be, say by FY25, how would that be?
See, it is difficult to put a figure on it. Market size is very big, and we are already, as I mentioned, we are participating in contracts with 300 crore. So it is it's very difficult to put a number on it, but it can be because 100 crore in 2 years.
Okay, so you expect by FY26, right, to get this all operational at the ideal capacity, ideal utilization?
That would be very difficult, but we are very positive. We are putting our effort to make it to the fullest capacity. But it is very much possible to do that in 3 years.
Okay. Sure. Thanks. That's from me. Thanks a lot.
Thank you.
Thank you. Our next question is from the line of Nimal Jadeja, an individual investor. Please go ahead.
Good afternoon, Bala.
Hi.
Can you hear me?
Yeah, I can hear you.
Okay, great. So congratulations on the great set of numbers, Bala and your team. I want to understand more from the risk perspective from the Chinese and the Korean players. So I understand you mentioned in one of the answers to the question that Chinese and Korean players at a global level, they are competitive. Okay, so how cheaper they are compared to our current cost base, okay, in terms of percentage. So are they 10% cheaper, 15% cheaper? And secondly, if they come to India in terms of their expanding their operations to India, Indian steel market, and there is no dumping duty, right? I think currently we have 10% or something dumping duty on the steel. So if we take out that protection, how competitive are we compared to the Chinese and the Korean players? So that would be my question.
See, at the global level, I think we are Koreans would be some 3 to 4% cheaper than our pricing. And Chinese pricing is like it's a huge range. In India, there are only 4 manufacturers, but in China, there are more than 100 manufacturers of strapping of various qualities. In India, we have like only 3-4 grades, but in China, the number of grades are so much wider. So the price difference could be as low as 15% to 10%.
Okay.
To answer your second question,
Yeah.
right now, nobody is importing strapping from Korea or China to India because there is a BIS regulation. Anti-dumping duty is there, that is secondary. But the manufacturer of the strapping should have the BIS certification for the particular chip code. Okay. Without that BIS certification, they cannot even export to India. Right now, none of the Chinese strapping manufacturers are having the BIS. So, first of all, even if they wanted to supply with anti-dumping duty, they cannot do it. Thanks to Indian government, they are protecting the domestic steel industry. So, it has been eliminated, completely eliminated the steel strapping imports. There is a Korean manufacturers having BAS, but they are not actively supplying because of the shipping and pricing. End of the day, they are not competitive when we compare with the Indian mills. So overall, Indian market is protected. Domestic market is completely protected by this external threat. But obviously, there is a lot of orders we are missing because of the pricing only. In fact, I could do more than 30-40 crore worth of exports in this financial year if the pricing viability is there. Since the domestic pricing is very high, that's why we are losing these orders. So that is one of the major reasons we are looking at setting up a factory out of India in Middle East. So once we put up a plant in Middle East, we can buy from anyone. We can buy raw material from anybody, not only from India. So once we set up a plant successfully, we can expect more orders in the overseas.
Okay, Bala, very clear. Thanks a lot for detailed explanation and congratulations and good luck for the future.
Thank you very much.
Thank you. Our next question is from the line of Rohit Reddy, an individual investor. Please go ahead.
Hello. Hi everyone. Hope I'm audible.
Hello, Mr. Reddy.
Yeah. Can you hear me?
Yeah, I can hear you.
So your voice is breaking.
So my question is regarding the tender business, which we had a couple of months back, like in November and December. So I see we were L2 and L3 bidders, and we did miss a couple of contracts for competitors ignored and grip strapping. So what are the key takeaways from the what are the things you would be improving in next tenders which we do? Anything you can point?
In the packing contract, there are a lot of competitors, not only those two you mentioned. Everybody have their own strength. They have regional advantages. Some people have better sourcing a particular item. So it's a huge subject. But overall, we are putting a team, we are putting regional officers to locally cater each and every client. That is one of the things. And as we put our regional officers, we are getting a lot of good inquiries. Number of orders we are participating also is increasing. So we will always try to participate in all the possible contracts. Last year we didn't do not even a single contract. Now already we got 3. So there are a lot of contracts with eligibility criteria, right? So since we are new we are losing out so many contracts because we don't have that kind of expertise and experience. So as we grow, as we participate in more contracts, as we start more contracts, slowly we can able to take on the established players also.
Another question is regarding the legacy thing which you do, right? So does it play any important role in getting some contracts, or will there be any different type of competitors?
Can you repeat the question again? Your voice is not very clear.
So we do lead-free steel, right? So strapping. So does it make any difference when compared to our competitors in gaining some orders? Or
you are saying we are producing our own strapping, so that can have some impact, right? That's what I was asking.
No. We do the lead-free steel strapping.
Lead-free.
Okay. So regarding that, do we gain some competitive advantage in gaining some orders?
Okay, because of our production process, see, that is always a plus point when we go to a customer discussion, that people are giving a good respect for that, because everybody, especially steel mills, they wanted to source from sustainably manufactured products. So and people are really appreciating. That is one of the plus points we are having. That definitely has some impact in all the orders we are participating.
That's it from me. Thanks for the opportunity. Congrats to Krishca team. Just a request, keep doing calls every quarter, so that we investors could know what is going on within the company. And that's it from me. Thank you.
Thank you, Mr. Rohit Reddy. Definitely, we will do it frequent calls every quarter.
Yes.
Thank you. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to Ms. Chandni Chande for closing comments.
Call of Krishca Strapping Solutions Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you everyone for joining the conference.
Yeah, thank you.
Thank you. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.